What is going on today, YouTube? Hope you guys all are having a great day. And today we're going to go over a little bit of this crazy year we've been having so far in the stock market. The time I'm recording this is December 10th of 2018. And as you can see, we're going to look at the stock market. All we're going to use is we're going to look at the S&P 500 this entire 2018. And if we look, we are today on the 10th. On the year, we are down about 2%, right near 2% line. So if you have followed the stock market this year, you've probably noticed we are seeing a ton of volatility. This usually does not happen. We can even look at a 3-year time frame to show you this a little more. It usually does not follow this crazy. I mean, look at from 2007, this is beginning 2018 on. Now look at the 2 years prior. It doesn't really move that much. These are major swings we're having. Volatility in the market is insane right now. And to break down this video a little bit, all these candles are, since I'm on a 1-year day chart, we are seeing the S&P X over the last year, and each candle represents a day. So very quick, red candle, that means stock market opened here and closed here when it's red. Green candle means stock market opened here and closed here for the day. Now these wicks, that was regardless of the open and close, the stock market that day went the whole way up to here. That was the highest it ever went during that day. And this wick down here means that's the lowest. Same thing for the green candles. But red means stock market fell for that day, and green means stock market went up for that day. So now that you understand that, this volatility has been absolutely crazy. And as you can see, these are just indicators, but we are riding pretty much below this line right here. And this is going to be like the simple moving average. Usually when traders are looking at this stuff, they want to see if the stock is trending above or below. And yes, this isn't a stock, but I'm going to refer to it as a stock in this video, just because it's easier to say than the S&P 500 index. So bear with me. It's the only reason why I'm saying stock. It's just a lot easier to say, even though this is the entire S&P market. So if you are a technical trader out there, you are really watching this lately, and you are trying to figure out what the market's doing. And now it's not really on an uptrend. We're going towards a downtrend right now. And to make my case farther, we're going to look at the max. I like looking at the max, so I'm looking at like long term. I always base my time frame on what I'm looking at. So if I'm investing in this for the long term, I'm going to look at the max chart and I'm going to see how it's trending. And right now, like in 2014, when it stopped trending above this line right here, and now all that is the EMA line. It's just another average line. It's not the simple moving average, but it's going to be tighter to the day-to-day fluctuations just because I have it set up like that. But like back in 2014, this started trending below, and we are on like a little downtrend. That's starting to happen again in 2018, the end of 2018. We're on a little downtrend right now, and stock market is falling. So if we even look at like a 20-year month chart, it's always better to look at these based on the time frame you're thinking about investing. So if the long term right now, to me, if I'm looking at this technically, we are going to be on a downtrend, and this downtrend is not going to be reversed until on this 20-year month chart, I'm going to start seeing these candles trending above this line again. Now, yes, this is more about like timing the market, but even look at these charts. When these candles are trending above this line, stock market's going up, and when they go below the line, stock market's going down. I think that's pretty easy to see. So right now, I really don't know what's going on in the market. There's a lot of talk about trade war. There's a lot of talk about nuclear weapons from South Korea, stuff happening over in Russia, even interest rates expected to go up in the future, and all of this is basically noise that really hurts the stock market. People panic and they'd rather go into cash. I'm talking about big companies out there. They would rather go into cash or buy back their own stock in times of uncertainty. That is just a way for them to protect themselves. If they have all their extra money invested in the stock market and the stock market tanks, that would be the easiest way for them to go out of business. If they pull a lot of money out of the stock market and keep it in cash, that is almost a security blanket for them in case we would have a big financial crisis, which it's not really looking that way. Unemployment rates are very low right now. Companies are having the biggest profits ever just because of the Trump tax cut. They're just showing better results than they really are having because of this tax cut. And I mean, honestly, the U.S. I mean, we're looking in good shape right now. So it is very odd. It's a lot on this trade war, and it's a lot on the uncertainty of what is to come between the trade war between U.S. and China and the interest rates. This can make a big difference. It scares people. People get scared. They pull their money out. They hold it in cash. So that is the whole reason. Until they figure out what is actually going on. When they figure out what is actually going on, money will probably be flooded back into the market, and you could see it go up. But I'm not going to really think it's going up until we get near this line again or even above it. Now, if you're in for the long term, you really don't care. You most likely don't care, and you're just going to leave your money in there, which is the right thing to do. If you would have panicked back, like say you panicked in 2000 or pulled out all your money in 2002 because you couldn't stand seeing it drop more than 50%, then you would have lost out on a lot of money. Yeah, it took another 6 years to recover before you got back up to where maybe if you invested in 2000. But hey, if you didn't take it out down here and you waited till up here, kept it in, at least you wouldn't have lost 50% of your money. Same with 2007, 2008 crash. Yeah, it took back till 2012 to get back to the 2007 highs, but at least you wouldn't have lost 50% of your value in 1 year if you didn't pull your money out. So if you're in for the long term, you can't worry about this stuff. If you're in for the next 30 years, all you're expecting is it to be worth more in 30 years than it is right now. So I just want to show you guys a different way to look at these charts and graphs based on a month basis, based on a 6-month day, based on whatever time horizon you're looking at. It can really change. So if you got any questions, leave a comment below. If you like this video, leave a like on this video. It just helps me out. It tells me that you guys are enjoying my content. And if you like videos like this, subscribe to my channel, and I will see you in the next video.